Well, the market is doing pretty well actually, up almost about 0.3%, but it's stable for now, so gives us some time to ponder over some macros and corporate issues. The VIP stock has been a big buzzer, rising 50% this year. 4.5 times since 2016 and 9 times in the last 5 years. That's the kind of wealth that this stock has created. Dilip Piramal, the chairman of VIP Industries, joins us now to talk about a whole host of issues and, of course, what 2019 looks like. Mr. Piramal, good morning and greetings of the season to you and your entire team at VIP Industries. Can you tell us what the triggers for growth could be for the company in 2019? We have spoken in the past about how premiumization is picking up quite a bit. You think that could be the big theme?
It's not only premiumization, but it's a general growth in the economy, and in our segment, we are very much dependent on the travel segment, and that is growing extremely well. While it's a paradox with the airline industries that they're having more than 20% growth and yet they're losing money. But the growth is there, and if people travel, then they need luggage. So that is very good for us. And it's not only just the travel aviation sector, but it's the general economy which is doing well. So whether the travel by road or railways, it all contributes to our business. And when the general economy is good, there's a lot of spending on weddings, which is another major driver of our business. So there is nothing new for the next year. It's just a continuation of the same thing, what we had, what I've been saying since April this year, that overall all the portents are good for our industry. We had a little bit of a speed breaker in the third quarter starting October, because oil prices in the country in the world were very high, and that affects our country quite badly. It also depreciates the rupee, which happened. But the good thing is that oil prices have come down, and outlook for oil prices is that the prices are going to remain like this. The rupee also has appreciated a little bit. So this speed break, this hump, I think we have passed it. So we are well on course to a good 2019.
Sure, sir. In fact, I was going to just talk about that. I mean, oil prices have not just come down. One could argue they've even crashed if you look at the last few weeks, a 35% drop coming in. Now, for the first half, of course, top-line growth has been very, very strong. Your margins for the first half are at around 15.5%. Is there some direct sensitivity with this fall in oil prices and the fact that the offtake for the product is so strong? How should we expect the second half of the year to really play out, both in terms of volume and in terms of your margins?
In terms of volumes, our growth is very good, the same as the first half. In terms of margins, there will be a slight dip in the third quarter and perhaps a little bit in the last quarter. But I think going ahead, we should get back to these margins. And margins also depend on the volume growth. When the volume growth is 20%, margins tend to go up because overheads don't grow in the same proportion. And when our gross margins are about 35%, then the net margins also tend to become quite high.
So why the margin dip in Q3?
I'm very optimistic about the next year.
So why are you anticipating a slight dip?
Q3 because one is that because we had a 5% additional import duty, then the rupee was weak against the dollar, and we did not take any price hike in the third quarter, but we'll do that in the forthcoming season. So because of that, there will be a slight dip in the third quarter. But it's very manageable.
Okay. I wanted to also
talk... The volume growth is very good.
Sure. I want to talk a little bit about what the global luggage industry growth could look like and where does VIP feature on that list? Because in terms of competition, we've spoken about Samsonite several times in the past, but there are so many others that are picking up, right? I mean, luxury luggage is also picking up, the likes of Tumi, LV, etc. And even within the regular segment, you have the likes of Delci. How has the competitive landscape changed, and how is VIP combating all of that?
Well, the very super premium brands like Louis Vuitton and Tumi and all are very, very high priced. Like if our products sell at about 5,000, something equivalent of Tumi would be 50,000. So that is a very minuscule market in India. In fact, I think their distribution must be 10 retail shops in India as against 5,000 of ours. So that is absolutely insignificant. Delce is a brand which is very much in the same category as our luxury brand Carlton, and in fact we sold Delce for about 10 years, and finally we gave it up ourselves because they were not giving us a long-term agreement, and we started marketing our Carlton brand. So I think our market shares are very good. Carlton brand, which was in that top segment of the mass product, was our market share was virtually less than 2%, is now about more than 20%. So we're doing extremely well, and there is not any significant competitive pressure in these segments also.
So what about blended market share? I mean, you spoke about Carlton market share 20%. Overall, where does the market share stand at? Last time you told us that you've gained a bit.
Yes, in fact, our market share has never been so strong in the last 10 years as it is today. It is in an excess of 50%.
Okay. So, Mr. Piramal, sir, there's this talk of the brand relaunch as well. If you could tell us what's in the pipeline, and then therefore what should we expect in terms of your advertising costs in the near future?
Our advertising costs are between 5 and 6%, and they will remain so. And whenever we come out with something, we will announce it then. I cannot say anything in advance.
Okay, Mr. Piramal, we'll leave it at that. Thank you so much for joining us, and once again, congratulations to your team and for creating so much wealth for shareholders. We hope you have a great 2019. But let's get back to that earlier theme we were talking about. Remember, M&M Finance just spoke to us about how there's a slowdown in commercial vehicle sales. It's not significant enough to worry about, but nevertheless, first-time users of CVs, we've seen a dip in that bracket. Ashish Kale, who's the president of the Federation of Automobile Dealers Association, joins us on the phone line. Ashish, good morning. Thanks so much for joining us. What is your own data indicating? What kind of inventory levels are we seeing? And M&M Finance says that it's not significant enough to worry about right now. Would you concur with that view?
Hi, morning. Is this inventory levels in CV particularly or overall segment?
For CVs, and then if you can break it up for us also within CVs, how are LCVs looking? How are used commercial vehicles looking?
So in terms of inventory, I don't think inventory levels are very high.
Okay.
So that's not a worry for the dealer community as such. But yes, growth has tapered down a bit in November. Although overall growth from April to November has still been strong. But we can see a different demand post Diwali. So, and that can be more seen in the heavy segment. The medium range and the LCV segment is still quite robust in terms of its growth.
When you say inventory levels are not very high, can you tell us exactly what it is at on an average for the industry?
On an average, industry inventory is about 20 to 23 days, and healthier inventory is about 15 days. But taking into consideration logistics and everything, I think this inventory level is not something which we are too worried about.
Ashish, overall, I also want to talk about passenger vehicles now. I mean, some of our colleagues have been reporting that inventory levels are as high as 5 to 6 weeks. I mean, can you share some figures with us? And what is really happening after Diwali on the passenger vehicle side?
Yeah, so inventory levels in passenger cars definitely is a worry for us. In fact, what normally happens is just before the festive season, all of us stock up on inventory. and because there is a huge spurt in sales during that time. But as we've already reported in our retail numbers that this time the festival season was not as expected. Because of which then the dealers are left with a heavy inventory. We are hoping that December, with all the companies coming out with fantastic schemes, we are able to get this inventory levels down to healthier levels. I wouldn't say that's the ideal level, but we hope that it will come down to around 35 to 40 days. Average inventory level or a good inventory level for the dealer is about 30 days.
So what does it stand at currently for the passenger vehicle space?
So, if you look at end November, average inventory level was about 50 days, depending from manufacturer and region, which we hope that with good sales in December, we should get down to about 35 days.
Okay.
You know, is there sort of anything that the automotive sector would sort of look out for? I know it's very premature, but there's been a lot of talk about whether there'll be any further tweaking of GST rates. Everybody's been focused on the speech, the Prime Minister's speech yesterday, bringing down a lot of things to the 18% bracket, etc. Anything further on GST rates that you would look out for?
I don't think that GST rates in new cars would be a priority for the government right now. I think if you look at the Honorable Prime Minister's statement, he's looking at more affordable things which are, for a common man. A car somehow is still looked as a luxury. So I personally don't feel that rates would go down, but we've definitely appealed to the GST Council to lower GST rates on used cars, because that has now become the entry-level segment and there is scope for the government there to lower the used car rates. So that is what we are hoping for in the next GST Council, if that could come down.
Okay, so only lower GST rates on used cars is what they're expecting. Can you also tell me, in the commercial vehicle space, you said that the inventory levels are not very high, 20 to 23 days. Yes. How is the discounting situation currently? Because that was a worry for a really long time, high level of discounting. All the players like Ashok Leyland said that they're not participating in that. But what does it stand at now?
So I wouldn't be able to comment specific to any OEM, but discounting levels have not gone down. They are definitely what it was before the start of the season. And that is definitely a worry, should be a worry to the manufacturers. So they've not been able to get down the discount levels.
And what are those levels, Ashish? What are those levels?
I wouldn't be able to comment specifically immediately, but they are anywhere between the range of 8 to 12% across a range. So this is average I'm giving you. In heavier it is, in HCVs it is more. It's not so much in the medium or the ICV range.
Okay. All right. So 8 to 12% is what you're talking about for the entire CV sector.
No, this is in wherever there is a bulk deal. If there is retails, it is much more lower. But wherever there is a bulk customer, and majority of heavy purchasing has been happening from regular bulk customers. So there is a fair bit of discounting that is still going on in the industry.
Okay. What about the schemes? You know, a lot of these two-wheeler makers like Bajaj Auto, etc., had this 555 schemes. Hero Moto had come out with a lot of schemes. Have they worked in terms of sentiment, or have we seen higher registrations because of these schemes?
So overall, November registrations have seen a degrowth. But if you look at the November wholesale figures which have been released, two-wheeler has not fared so badly, especially in the rural areas or products or companies which do better in rural. So I am assuming that these schemes have worked. And definitely rural demand, Diwali and post-Diwali was a little bit better than what it was in the urban spaces. So two-wheeler as such has not fared as badly as what passenger vehicle fared during the festive season. December numbers are yet to come, so for me to comment, it's too early right now. It's the season is still, the month is still ongoing, and usually it picks up in the next 15 days or the last 15 days. So I think we'll be in a better position to comment on those numbers around 2nd or 3rd of January.
Okay, Ashish, we'll wrap it up. Hopefully, your expectation of lower inventory levels will really come through for you, for the OEMs and for the economy at large. Thanks very much for joining in. By the way, the market's continuing to take off, 10,955. Remember, we are trading above the recent peak, the 10,941 level, which we hit at just the start of December. pull up something like an ITC, lots of stocks on the move, Lever, ITC. A lot of the banks are doing extremely well, both on the corporate side as well as on the PSU side. So, there's a lot of momentum in the market out there. Let's get back to our technical experts then. Ashwini, Mitesh and Sandeep Wagle with us now. Ashwini, so, it's still going higher and higher. If someone's booked profits in the morning, now at 10 a.m. and seeing the screen continuing to show momentum, what's the advice?
See, basically, this is a macro-driven market, and this, sort of limp movement in the mid-caps have corrected very strongly. So the market breadth is strong, and, you have financials, particularly across the board, doing well. It won't be very easy to create a correction, and once 11,000 is crossed, that was kind of, a benchmark in people's mind that 11,000 crossing of that will lead to short covering. So far the way the market has progressed, because of this, change of overall macro, you are seeing fairly strong market breadth, and the market will surprise you on the upside, maybe 11,200 thereabouts. So stay with your long positions. Fresh longs is a problem, because tomorrow if the market comes off 100 points, given the global environment, then people can get uncomfortable. But any sort of gap down, because global reasons, local, whatever, just try to get in, because momentum is strong, there is news backing it, and I would think that there are still those final shorts which are hanging on to 11,000. Having said that, individual stocks, DHFL is a buy with a stop of 220, target of 234. Canfin Home is a buy with a stop of 280, target of 295. Indiabulls Housing is a buy with a stop of 810, target of 845. And now these are spaces, housing finance, etc., where the shorts could be, taken to cleaners.
Okay, yes. Nigel was also telling us earlier in the day that there are plenty of shorts, that FII short positions, and perhaps you could see some covering at this point in time, leading to a higher move on the index. But Mitesh Thakkar and Sandeep Wagle are with us. Mitesh, you had suggested to carry on the positions as well. What would your stop loss be now, and what would your individual stock calls be?
See, I think trail it up to about 10,920, and my sense is that there's a good chance that if we can sustain and remain above this 10,950 zone, then I think 11,050, 70 could happen on the upside, which means that there could be another 100 to about 115 points left. So therefore, just trade it about 10,920 and maintain a long bias. The stock calls that I have right now are a buy on Indiabulls Housing Finance. It's moved up slightly, so around 810. Enter with a stop at 794 for targets of target of 850. And the other one is a buy on State Bank of India with a stop at 291 for targets of 308.
Okay, Sandeep Wagle is also with us. Sandeep, it's a strong morning once again. What are you trading?
I have two buy calls, a buy in a NBCC, stop loss of 53, target of 60, and a buy in a Manappuram Finance, stop loss of 90, target of 96.
Okay, everyone's buying financials, everyone's buying NBFCs. That seems to be the theme that's picking up right now. Also, a lot of consumption stocks. So ITC, consumer staples, that is. ITC is now up about 2%, providing the next leg of leadership in the market. Thanks, gentlemen, for joining us.